Do you have to open up an LLC whenever you become a rig welder? There's a lot of confusion. How you get paid? What do you need to do for taxes? Let's get into it. Do you have to do anything different for your taxes? It depends how you're gonna get paid. The majority of the time, you're gonna be an employee, just like if you were working single hand, if you're working at Walmart or any place where you get a W-2, you're gonna fill out your W-9, write down however many dependents, you're gonna take out the taxes. At the end of the year, you go to H&R Block or any of those places. Pretty simple to do your taxes. If you ever hear the term split check, that means that you're gonna be a W-2 employee. Split check means that your arm or you as a welder is gonna get an hourly rate. They're only going to tax that. Then your truck and your per diem are not going to get taxed. For the majority of the time, all you have to do is fill out that W-9 and there's nothing to it. You're an employee. If you ever hear it's going to be a 1099 job, that means that you are going to be an independent contractor and not an employee. Whatever hours that you work, that company that hires you is gonna write a check. Let's say they settled at $75 an hour. They're gonna multiply 75 times whatever hours, and they're gonna give you that entire amount. This is when it gets a little bit tricky and you have to be disciplined with your money. You have to separate your expenses that you're gonna be using for your job, so that way you can have a tax deduction. What is a deduction? In simple terms, is what you are going to subtract from the entire money that you made in a month. So let's say you made $20,000 at the end of the month, but some of that money, you used it to buy welding rods, you used it to buy grinding disc, or whatever it is that you bought to complete the job. You get to deduct that from all the overall money that you made. Whatever's left over is what's going to be taxed. So if you made $20,000, but you spent $5,000 in buying things to go to work that you used at the job site, you're only gonna pay taxes on those $15,000. This is when you have to be extremely disciplined and separate all of your expenses between what you're using, and more than anything, hire a tax professional so they can help you maximize your deductions and tell you what you can deduct and what you cannot deduct. Now, what is an LLC? An LLC is a legal structure that you set up. It's like a second person that you created, but it's more for legal protection. It's a legal term that you use, or a legal structure that you use to protect yourself. In case anything goes wrong and they need to sue you, it protects your personal assets. 1099 and being an LLC, you kind of get to deduct the same things, but again, you would have to consult like a CPA so they can explain it a little bit more. But as far as what you do different on the job, you're still gonna have to keep track of everything that you're spending for whatever work that it is that you're doing, and then